The greatest bubble of all is the bubble of fiat currencies and global debt. The front runner in this race to popping the global debt bubble is none other than the United States government, the greatest debtor in the history of the world. And we're going to be breaking down what that means for you, your money, inflation, the future, and where we're going next. I'm here with my good friend, Steve Penny. He's the creator of the Silver Chartist newsletter. It's the best free newsletter out there for gold, silver, commodities, mining stocks, understanding the macroeconomic climate that we find ourselves in, and more importantly, how you can make money from it, because what it really is a wealth transfer. And there are ways that we can preserve, protect, and grow our wealth during this time. So be sure to check out the Silver Chartist newsletter right there down below in the description and pinned to the comments. Thanks for watching today's video. If you're new here, want to welcome you. If you're a returner, welcome back. Thanks for watching. If you enjoy this, then make sure you let us know in the comments down below. Hit the bell notification, get notified for new episodes. We're out here every day trying to help prepare as many people as possible for this war on our money. And hitting the bell notification will help you ensure that you get notified. Shout out to our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. So thank you, Vizsla Silver. And thanks, Steve. It's good to see you, my friend.
You bet, brother. Great intro. Always love how you like to focus not so much on the problems, but the solutions. And you're right. This is a wealth transfer. It's already been well underway. And we want to position ourselves to be on the receiving end so that we can be in a position to help our families and bless other people along the way. So looking forward to another good conversation.
Yeah, martial arts and all that stuff's become Brazilian jiu-jitsu, like all that, right, has become so popular. Self-defense, right? And the greatest self-defense that we have against this war on our money and against the governments that are destroying it is by getting rich. It's the number one way that you can actually protect, preserve, and defend yourself against this. And so while we talk about some issues, problems, what could be happening, which we'll do today, we're going to be leading you, or Steve's going to be leading you into what he believes are the best opportunities in this as well. But let's start with what's going on, Steve. You were talking to me about the 10-year treasury and saying we're in some pretty interesting territories. And so I was wondering if you could start there.
Yeah, I'd love to. I think, there's obviously a lot going on in the markets right now, but the number one thing I think we should be focused on is interest rates, specifically the benchmark 10-year yield, as that yield has just, exploded from 0.36% of March of 2020 up to over 3% now. And I believe that March of 2020 marked the end of a 40-year bull market in bonds and in debt instruments in the U.S. And that's significant because you go back 40 years, that means most money managers, institutional investors, they've never lived through an era of rising interest rates. And that changes everything. It changes, the price of money. Now, that said, nothing continues to move. And we're at an interesting place if you look at a chart where interest rates have run really far, really fast. They're probably due to pull back and consolidate here. But I do think the overall trend has changed, and we're going to see higher yields, in the years ahead, and that really changes, the whole paradigm of the global financial system.
Explain to me what the ramifications of this are for you, me, and somebody listening to this right now. What are the ramifications of that when you say you think this trend line will ultimately continue?
Well, the price of money. The treasury market is the price of money. And when you change the price of money, you change everything. But really what matters even more than nominal yields is real yields. So if the 10-year is at 3.2%, but inflation is at 8%, you've got a negative 5% yield. And that's highly inflationary. And I think that's going to continue. But, when you have nominal rates double like this, or call it 5% as the average 30-year fixed mortgage right now, that makes housing almost unaffordable. What was previously affordable a few months ago now puts just owning a median priced home out of reach of many Americans. Everything is based on debt. Everything. So when you double, when you see the interest rates rise like this, it kind of, The last time we saw credit contraction was in 2008, and credit contracted, just this little blip on the radar, and it almost took down the whole system. So if credit really contracts because of rising rates, it has the potential to take down everything. And that's why I don't think the Fed is going to do that or allow that to happen. They're going to reverse course. I'm highly, highly confident of that, and step back in and buy these treasuries to try and force yields back down, or at least keep them from rising as fast as they were.
When do you think they pivot?
My crystal ball is broken, but I think there's a very good chance that happens this fall. October timeframe is typically a weak month for general equities. And, I think the Fed likes seeing asset prices under pressure a little bit here, because that's disinflationary. It kind of it gives the appearance that they're being successful in their fight against inflation. So I think they're content to let a little bit of air out of this bubble, but they don't want it to get out of control. So I think, September, October is a decent guess on when they may pivot. But, what's interesting, especially the debt markets and silver and gold markets, commodity markets, are forward looking. So I think silver and gold will anticipate this pivot before it actually happens. And we could be starting to see that right now. Silver's up a little bit from the lows. Gold is starting to curl up from the lows. That doesn't mean downside risk isn't still present, but I think the metals market will anticipate the Fed pivot.
I know you got a chart breaking down, this overall debt market and the 10-year and where we're at with this. So why don't you show us that?
Yeah, a picture's worth 1,000 words. So this chart goes back to 1980, so over 40 years. And you can see this 40-year downtrend line. This, by the way, is a chart showing the yield on the 10-year treasury. And look at this peak right here, this drop in March of 2020. Like I said, I believe that drop right there marked the low of a 40-year or the top of a 40-year bull market in bonds. But this rally is really unprecedented. I mean, look at the steepness of this rally. And if you come up to the top here, this RSI tells you when something's overbought. We haven't been this overbought in yields in 40 years. So it might sound like I'm kind of talking out of both sides of my mouth here. I think over the longer term, yields are going to go higher. But over the short term, I think we're going to see, a pullback in yields as the Fed begins to indicate that they're going to reverse course. They even floated some trial balloons about that last week. Fed TF Metals calls them Fed goons. I kind of like to call them that. Fed goon Bostic said, hey, maybe we'll do 50 basis points the next 2 times, then kind of pause. And I think that was a trial balloon to kind of indicate, see how the market's going to react if and when they reverse course.
What happens eventually when this keeps going? You talked about everything moving off the credit markets. One of the guests that we have on the show here a lot is Greg Manarino, and he says the stock market and really everything is a derivative of the debt market. And when the debt market goes, everything will go. What does that look like? Do you think it just goes until it doesn't anymore?
Yes, I think it goes until they roll out a new system. But to roll out a new system, they're going to need some kind of crisis. But we've been saying this for a long time. So this is a major convergence that's happening right now, where the Fed is going to have to choose between sacrificing the dollar and allowing inflation to run hot, or crushing the economy by fighting inflation. And all of historical precedent suggests that they always choose to sacrifice the dollar or allow inflation to run hot, as opposed to letting the economy tank on their watch, where they get all the blame. So we're seeing that come. We're coming to a crossroads right here, right now, in the next few months, where they're going to have to make that decision. Do they let interest rates continue to run and crush the housing market, crush the stock market, crush the debt markets? Or do they pivot and start buying up those treasuries and allow inflation to run even hotter than we've seen?
Speaking of making inflation run hotter, I was just reading a little call to action that I believe it was Biden Chief of Staff Klain was urging Biden to make an inflation task force. That was the exact word he used, inflation task force. And I'm not sure if you saw this. Did you see this?
No, I didn't.
Okay, yeah. He wants to make an inflation task force. And the inflation task force's job is going to be that they are going to buy commodities when commodities sell off, and then they're going to sell them back to the American people, was one of the things that they said. I'm sure there's many things that they'll be doing that they won't be telling, but essentially they were saying like stabilizing the commodities prices. And who knows what the exact agenda of that will be. And it was just him proposing it. It's not something Biden has said at all, but the essential theme of that is inflation is happening. Let's create a task force to print more money in order to solve inflation. And that seems to be a theme that's picking up. Inflation's bad. We will print more money in order to solve it, to stabilize commodities, to give you gas things, to help you with rent, whatever it is. Well, let's print more. Let's go into debt more, and then we'll help you. Do you see that as a theme that will continue? And what do you think about that?
Yeah, a couple of thoughts. I mean, the government always feels like they have to do something instead of letting the free market solve things, which would obviously be the best solution. Just let the free market work. It would sort through these things. But a couple of thoughts. So they're pretty much saying, hey, we're going to buy low and we're going to sell high. Simple as that. Well, I mean, there's Wall Street professionals who dedicate their entire life to doing just that and fail at it. So, hey, we're just going to buy low, sell high. If it were that easy, more people would be doing it. But then you can go back throughout any government program. Whenever the government declares war on something, you can almost guarantee that you're going to get the exact opposite effect. For example, back in the 70s, they created the Department of Energy to stabilize oil prices. I mean, oil prices have been pretty darn stable for decades. And then look for oil prices since the 70s. The war on poverty. What's happened since then? Since they declared war on poverty, we have more poverty.
War on terrorism. War. I mean, and the other crazy thing is, every time they declare war on something, they print a whole bunch of money.
Yes. Yeah. And they get the exact opposite desired effect. I mean, it's like everything they say, you can just take the opposite. Patriot Act, I don't want to get too in the weeds here, but, that's the exact opposite of patriotism, if you love freedom and things like that. But it's always the opposite of what they say. So that's my initial thoughts on this task force. I hadn't heard about that.
It's wild because you can see we really are converging into somewhere near the end of this current debt-based system, I guess, instituted when the Federal Reserve was signed in 1913. We're coming to the end of what Voltaire says, that all fiat currencies eventually return to their intrinsic value, which is zero. What's on the other side of that?
Not to get too gloomy, but I think he's right in that if they did nothing, all currencies do return to their intrinsic value, which in this case is zero because there's not any metal content or anything, just paper. However, you and I both know that they've got another system ready to roll out when the time is right. So I don't think, I think we'll see something new before we see currency go to zero. And unfortunately, these kind of end of empires or currency regimes usually end in war. It's a scapegoat, it provides a scapegoat for them. These people aren't stupid. So, that's likely coming. But to be on the brighter side, back to strategy, a lot of people know this stuff, all right, the things we're talking about. But a lot of people don't put as much thought, I think, as they should into what are you going to do? What is your strategy? You need to have a specific strategy. What asset classes do you want to own? What percentage of your portfolio do you want to dedicate to these sectors? How do you want to build a portfolio? What's your accumulation strategy? What's your long-term exit strategy? Do you want to trade in and out? Do you want to have a simple buy and hold? These are all things that we should be thinking about, as opposed to talking about the problems all the time, which you do a great job of.
So let's talk a little bit about that. Anyone that bought mining stocks, commodities in 2020, 2021 has done very well. We're in the early innings of overall, whether it's battery metals, whether it's uranium, whether it's gold, silver, energy, oil, of a big commodities run, at least I believe so. And now we've seen the Fed talking more and more about stopping inflation and this and that. And so we've had, Netflix down, whatever percent, all these mainstream stocks down a lot of fear. Of course, in an environment like that, you're going to have commodities and mining stocks sell off even more than mainstream equities. What's your overall view on the metals, commodities market, and where we go from here?
Yeah. So first of all, I don't want to sound unsympathetic to people who are deeply in the red on their mining stock positions. I feel for you. However, I like to say, volatility is the price of admission to participate in a commodities bull market. That's just the way they are. It's going to be a wild ride.
That's a good one. Before you go on, say that one more time.
Volatility is the price of admission to participate in a commodities bull market. If you can't handle volatility, you should either not participate or adjust your position size to a level that allows you to sleep at night. But a lot of us are way, I don't want to say overexposed, because I'm overexposed, but I sleep well at night. I'm fine with that. But if you can't sleep at night, you're probably overexposed. Rick Rule says you're either a victim of volatility or I forget, or you can use it to your advantage or something like that. So I think, there's ways to use this to your advantage. So go ahead.
Break down to me what you said, I can sleep at night during markets doing something like that. Why is that? What is your belief? What is your feeling? What's your conviction there?
Yeah, to be a contrarian investor and invest in alternative asset classes that are highly volatile, I think it's required to have a deep understanding of the fundamental thesis behind why you're invested in it, because that allows you to endure this volatility and not worry too much about it. Like if you didn't understand anything we were talking about before about the Federal Reserve and debt-based fiat currencies and all this stuff, you'd say, forget this, I'm out of here with gold and silver and this stuff. But if you understand that, you fully have internalized it, that there is no alternative. They either print and inflate or everything crashes over the longer term, then you sleep well at night. This is it's going to come back. It's frustrating that it's taken so long, but understanding the fundamentals helps you to endure it.
So let's talk a little bit about specifics on this channel here. You've been talking for a long time about something that you felt was a great trade that was unloved, undervalued, and people weren't noticing, and that was platinum. So let's talk about that.
Sure. If you don't mind, I'll share a quick chart. So this chart right here shows platinum versus gold on a ratio basis going back to 2000, so about 20 years. And you can see here again in March of 2020, that ratio reached a historic extreme that I don't think has ever been seen before, platinum versus gold. Typically, platinum trades at a premium to gold. It's more expensive for an ounce of platinum than gold. So it's an anomaly when platinum is cheaper than gold. Well, right now, platinum is about half the price of gold. I mean, this is a major, major historic anomaly. And there are reasons for platinum's underperformance. A lot of it goes back to the Dieselgate scandal in 2014, where the world swore off kind of diesel engines, which platinum is used in catalytic converters. But I think the bearish news is more than fully priced in, but the bullish catalysts are almost completely ignored. There's a lot of bullish catalysts coming for platinum, to include hydrogen fuel cell technology. Governments, whether you agree with that or not, governments are putting a ton of money into it. So are big companies like Hyundai. I mean, they're investing millions and millions of dollars into hydrogen technology, and platinum is a major, major component of that. Also, palladium and platinum can be substituted on a one-to-one basis in catalytic converters on internal combustion engines. So it only makes sense for these auto manufacturers to stop using palladium, start using platinum. It's half the price. And we're seeing that start to happen already. And then the third one would be investment demand. I'm not the only one who looks at charts like this and says, wow, look at this thing, it's undervalued. So I think that right there is kind of a nice, perfect storm for platinum to play rapid catch up relative to other metals. And I think it's going to outperform gold and possibly even silver. I own much more silver than platinum. But platinum I view as more speculative, but it has the potential to outperform silver. And if you look at this ratio chart right here, you can see it's undervalued historically relative to silver even. So, I like platinum a lot. So that's my spiel on platinum.
Interesting. So for everyone listening, if you want to check out more on platinum, you can check out Steve's Silver Chartist newsletter. There's a free sign up right there down below in the description and pinned to the comments. So that's platinum. Let's talk about, where do you want to go next? We talk about gold. We could talk about silver. We could talk about uranium. We could talk about what your overall view in general is on the commodities market and what will be the next trigger for a leg up.
Sure. How about gold?
So here's my question. To me, I feel like gold, when there's genuine fear that sets in, it's one of the hard movers. March 2020, people thought it was the financial apocalypse, and then they just printed, what did they print? Like $12 trillion. And then you just see this incredible move in all commodities, gold and silver as well. What do you think the next trigger for a move up is? Is it that the Fed reverses course and they start moving backwards on interest rates? Is it that there has to be a massive crash and that fear drives it? What is your feeling on the driver moving forward for precious metals?
Okay, a couple of them. So first of all, with gold specifically on the chart, it was March 8th, just a couple months ago, that we marked that $2,078 high. And that's when everyone and their brother wanted to buy gold and gold stocks. You see it all over Twitter and social media. And, I actually shorted it right there as a short-term trade, saying, hey, we're due for a pullback. And all I wanted to see was a higher low. The previous low was 1780. The low on this most recent little dip is 1785. So that's a higher low. So we are still in an uptrend in gold. So the trend is intact. It feels worse than it actually is in gold specifically. But as far as triggers, I think the next probable one will be the Fed reversal or pivot back to more easy money. But I think, the big catalyst, which I'm not sure when this happens, is when the Fed tries to intervene and it doesn't work. Let's say, interest rates start running higher and they intervene and say, hey, we're going to start buying treasuries again to, bring interest rates down or prop up the stock market or whatever. And it has the exact opposite effect. Well, I think that's the moment that, you run, not walk, to get some physical metal if you don't have any.
Yeah, that's the big shebang, right? Then that's when the debt market's cracking. That's what I'd rather not be here for, but we'll see how that one unfolds itself. Mm-hmm. How about the rest of the commodities market, whether it's battery metals, uranium? Do you think those are on hold until Fed reverses course and we see what's happening this year and we trade sideways until then? What's your feeling?
That could be the case. Uranium, I think of as it's like its own animal because it's just pure supply demand fundamentals. The world needs more uranium. They're building these nuclear power plants. Even if we go into recession, uranium accounts for baseload power. So it's like the first, 10, 20% of power, to 20% here in the United States. So even if there is a recession, it doesn't really have that much of an impact on demand. And supply is still constrained. So we still need higher uranium prices. So I'm still very bullish on uranium. I'm bullish on copper and platinum and nickel as well. It just, those could take a little bit more time to grind sideways, which I'm okay with because I still have some positions I'd like to accumulate on weakness.
Very good. Very good. Last question. For someone that's watching what's happening, they are invested or interested in investing in commodities, mining stocks, ways that can protect themselves. What's your best advice during these very turbulent and bizarre times?
Yeah. So first thought is if you don't know the foundational things we're talking about in the beginning of this talk, I see a book. I love looking at people's bookshelves, and I see Creature from Jekyll Island by G. Edward Griffin. If you're confused by all this, that's a great
damn good eyes.
Well, I can't read it, but I know what it looks like because I've got my own copy right there. So anyway, that's a great book to read to understand what's happening in the world, not what the schools are going to tell you or the news is going to tell you. Second of all, control what you can control. Worry, but don't worry about things that are out of your control. There's a lot of things that you and I have no power to control. So why waste our time and energy focusing on that? And we can instead be focused on, building resilience and learning how to prosper. You can prosper in these environments. We don't want to sound doom and gloomy. There's ways to prosper, to be a blessing for your family and other people. And, that's what we focus on. And that's what you focus on.
Beautiful. So we want to thank you for watching today. If you haven't yet, be sure to get Steve's free Silver Chartist newsletter. You can sign up for it in the description and pin to the comments right there down below. If any of that caught your eye, uranium, platinum, gold, silver, you want to understand what's happening, be sure to check that out. I want to thank you for listening today. If you enjoyed it, let us know in the comments right there down below. Hit that good old like button, subscribe, bell notification, all that fun stuff. And Steve, we want to thank you for coming on.
Thanks, brother. Appreciate it.